Hello, and welcome to our channel. I'm Chloe William, here to bring you the latest updates on the U.S. stock market as of January 9th, 2025. Let's dive into today's top stories. U.S. stocks are currently valued at levels reminiscent of 1996, when former Federal Reserve Chair Alan Greenspan warned of irrational exuberance. This comparison stems from a valuation measure contrasting earnings yield with the 10-year Treasury yield, indicating that stocks are at their most expensive since 2002. The recent drop in this valuation model is largely due to rising U.S. bond yields amid inflation concerns during President Donald Trump's second term. Federal Reserve Governor Lisa Cook and Goldman Sachs's Peter Oppenheimer have noted the stock market's vulnerability to significant declines, suggesting potential corrections due to these rising bond yields and economic uncertainties. In observance of former President Jimmy Carter's funeral, U.S. stock and bond markets are closed today. However, futures trading indicates a decline following news of new restrictions on Nvidia exports. Nvidia's stock has edged slightly lower amid reports of further chip export curbs by the Biden administration, reflecting ongoing geopolitical tensions impacting tech stocks. Looking internationally, Deutsche Bank projects that European stocks will outperform U.S. stocks in 2025. Factors influencing this outlook include improved macroeconomic data in Europe, lower interest rates, rising earnings, and potential positive surprises from China. In contrast, the U.S. market faces risks such as high concentration in tech stocks, economic policies under President Trump, and rising bond yields. Deutsche Bank recommends an overweight position in European equities relative to U.S. stocks for the year ahead, citing Europe's potential increase in retail sales, a rebound in manufacturing, and advantageous lower bond yields. Geopolitical tensions in the Middle East are contributing to market volatility. Reports of potential missile strikes from Iran against Israel have led to increased market uncertainty, driving investors towards safe haven assets. Experts warn that rising oil prices and potential supply chain disruptions could exacerbate inflation concerns. Oil prices have surged in response to these tensions, adding inflationary pressure and impacting global markets. Back in the U.S., investors are exercising caution due to mixed economic data. A sharp slowdown in private payroll growth contrasts with a decline in jobless claims, creating uncertainty about the labor market's strength. Additionally, reports suggest that President Trump is considering declaring a national economic emergency, potentially introducing new tariffs that could lead to a global trade war and increased inflation pressures. This uncertainty is prompting investors to remain vigilant, with a focus on upcoming economic reports and Federal Reserve meeting minutes for further insights into the future interest rate trajectory. Analysts are questioning the sustainability of high profit margins in the S&P 500, which have been elevated since 2021. While high-margin tech companies have driven these peaks, rising labor and input costs, along with moderated interest rate cuts by the Fed, suggest that market expectations may be overly optimistic. Margin improvements are likely, but it's important to temper expectations given the potential challenges ahead. That's all for today's market update. Remember, the stock market is influenced by a complex interplay of factors, both domestic and international. Stay informed, stay vigilant, and consult with a financial advisor before making any investment decisions. If you found this video helpful, please give it a thumbs up, subscribe to our channel, and hit the notification bell so you never miss an update. Thanks for watching, and we'll see you next time. Fade out with subscribe and like.